You know, the market is a mirror, not a mystery. It reflects back the collective beliefs of everyone participating. At first glance, it looks complicated, unpredictable, even chaotic. But it's not. It's the same stream of human thought and emotion, repeating over and over under new circumstances. Traders come to the market hunting for formulas, codes, mechanical certainties, something to erase uncertainty. But there is no formula. There never was. What exists is structure within uncertainty, the rhythm of human behavior, the recurring patterns of belief, fear, and euphoria. If you can align your perception with that rhythm before the crowd recognizes it, you gain an edge. Not a permanent edge, just one defined by clarity and confidence in the moment. That's all you ever need. The question is, can you stay mentally still long enough to perceive it clearly? Most traders can't. They chase every tick, every price movement, every illusion of control. They mistake activity for progress. They're looking so closely at the bark of one tree that they can't see the forest breathing around them. The big money, the real growth, doesn't come from reacting to every flicker. It comes from perceiving context. It comes from recognizing the broader wave and aligning with it. That's the difference between a gambler and a consistent trader. The gambler reacts to noise. The professional synchronizes with flow. Ask yourself, which mindset are you operating from? The secret to recognizing a market wave before it builds isn't in the data. It's in your awareness. You have to listen to the market, not to others' opinions or the seductive narrative of certainty. The market is always communicating. You just have to quiet your inner noise to hear it. Prices reflect collective beliefs shifting in real time. When something behaves stronger or weaker than the overall environment, that's the market whispering its truth. Are you still enough to hear it? The market never lies. Your interpretation does. The tape is neutral. It simply reflects decisions made by thousands of minds. The truth is hidden not in prediction, but in behavioral patterns, how the market reacts under pressure. When bad news hits and price refuses to fall, that's strength. When good news can't lift it, that's weakness. Most traders overlook these cues because they're mentally impatient, desperate for action, equating movement with progress. Haven't you felt that compulsion to do something just to feel in control? That's the enemy of consistency. Patience separates the consistent from the chaotic. You can study every chart and read every opinion, but if you can't stay centered when there's nothing to do, all of it is wasted. The biggest profits don't come from constant trading. They come from waiting for alignment between your perception and the market's message. Every beginner wants to buy the low and sell the high. That's the illusion of control. The professional aims for the probable zone, the middle of the move where belief and structure align. That's where confidence lives, not perfection. Think of the tide coming in. The first small ripples mean little to most. They're dismissed as noise. Then come larger swells, and finally, the full wave everyone recognizes. But the trader who noticed those early ripples didn't need confirmation. His awareness was already aligned with what was unfolding. That's what it means to think in probabilities. You don't need certainty. You only need enough evidence to act without fear. Most traders can't believe what they see until the crowd validates it. But by then, the probability window has already passed. The market rewards those who trust their process, not the crowd's approval. To operate this way, you must learn observation without expectation. Guessing is the ego's attempt to control the uncontrollable. Observation is surrender to what is. Every stock, every market has a personality, a unique way of expressing collective emotion. When you study it without bias, you begin to sense accumulation, exhaustion, and imbalance. That's alignment with flow, not prediction. Haven't you noticed how some moves feel right or wrong without data to prove it? That's intuitive calibration born of experience, not impulse. Back when I started, I had no special information, just the flow of price and volume. Yet it was enough because I was watching behavior, not chasing explanations. By the time the story hits the news, it's already history. Fear and greed haven't changed in a century. These emotions generate every wave. Price doesn't move because of opinions. It moves because beliefs change. When fear begins to take hold or greed starts to rise, the market reflects it immediately. Can you learn to recognize the emotional shift before it's visible on the chart? The signs are always there. A market that refuses to break under bad news or can't rally despite optimism. Those are emotional footprints. But most traders won't trust their observations without outside validation. They wait until the majority agrees, and by then, they've lost the edge. The crowd always reacts. They never perceive. That's why the crowd always loses. True consistency requires psychological isolation, being at peace with your own analysis even when it contradicts the herd. Trading is lonely because alignment with truth rarely matches mass opinion. You'll often feel foolish buying when everyone's pessimistic or selling when everyone's euphoric. But those are the trades that flow with probabilities, not emotions. Can you endure the discomfort of being early? The discipline to look wrong in the short term, to be right in the long term? Spotting waves early isn't about formulas. It's about self-mastery. Human nature repeats itself endlessly. Once you understand the emotional patterns, it's like recognizing an old friend. The same fear-driven collapses, the same greed-fueled surges, only the tickers change. The challenge isn't recognizing them, it's acting when your mind still doubts and your emotions scream for reassurance. The market pays for alignment and execution, not knowledge alone. The professionals act when the structure supports it. The amateurs wait for comfort. The wave begins small, subtle, a narrow range, quiet strength. Then it builds as confidence grows, and finally, it explodes when the crowd rushes in. By that point, the professionals are distributing, and the latecomers are trapped. You've seen it happen again and again. Every time you wait for certainty, you exchange potential for safety. And safety is an illusion. The hardest part of trading isn't seeing. It's believing what you see and staying with it. The mind constantly tempts you to exit too soon, to grab small profits, to protect ego. But the real move extends beyond comfort. That's why the skill isn't in intellect. It's in psychological endurance. The market will always test your discipline, tempt you to abandon your edge for emotional relief. Can you remain neutral in the face of temptation? A consistent trader doesn't seek tips or validation, only clarity of behavior. Strength where there should be weakness, weakness where there should be strength, those are the tells of shifting belief. Every tick represents a battle between fear and greed, conviction and doubt. The market itself doesn't care who wins, it's neutral, like a mirror. The moment you impose your opinion on it, you separate yourself from its truth. To trade effectively, you must release ego completely. Be willing to be wrong quickly, without resistance. The market doesn't owe explanations, it only presents opportunities. Your job is not to make the market do anything. It's to flow with what it's doing. Every moment you fight reality, you're reinforcing fear. Every moment you accept uncertainty, you expand clarity. Humility isn't weakness here. It's freedom. The biggest rewards come not from brilliance, but from alignment. being in tune with the rhythm of the wave. Small, frequent trades, driven by impatience, drain energy and capital. The large moves, the high probability setups, require stillness. They don't appear every day. Your work is to stay ready, centered, and patient enough to act decisively when they do. That's not complexity. That's simplicity through discipline. The longer you trade, the clearer it becomes. This isn't a game of intelligence, it's a game of emotional consistency. Anyone can recognize a breakout. Few can hold their conviction through uncertainty. The market reveals character. If you're greedy, it will expose it. If you're fearful, it will magnify it. If you're impatient, it will punish it. Your results are a perfect reflection of your internal state. So ask yourself, which part of your belief system is costing you the most? The trick to spotting waves early isn't a trick at all. It's practice, observation, patience, and self-awareness. You watch, learn, wait, act, and let go. Over and over again. It's repetitive, unexciting, and emotionally demanding. That's why so few succeed. They seek excitement instead of consistency. The market doesn't reward thrill seekers. It rewards those who are psychologically aligned with uncertainty. Character in this business means emotional neutrality, patience, and belief in probabilities. Not intelligence, not prediction. The markets don't care how smart you are, only how disciplined you can remain when tested. Every trade is a reflection of your state of mind. Master that, and the waves will reveal themselves long before the crowd ever sees them. Discipline is the cornerstone of consistency. Without it, no technique, system, or strategy has meaning. Discipline means you honor your process even when every emotion urges you to break it. It means you exit when your plan says exit, not when your ego finally admits defeat. Every trader knows the rule. Cut losses short, let profits run. But few have the mental structure to live it. The moment the market turns, most begin rationalizing. It'll come back. It's only temporary. That isn't discipline. That's the mind trying to avoid pain. The market doesn't reward avoidance. It rewards acceptance. Ask yourself, how many times have you rewritten your own rules in the heat of the moment just to escape emotional discomfort? Humility is another pillar of mastery, and perhaps the hardest. The market humbles every trader eventually, but the mature trader humbles himself voluntarily long before the market is forced to do it. Humility means you accept being wrong as part of the process, not as a blow to your identity. In Mark Douglas's terms, every trade has an uncertain outcome. Wrong trades don't define you. How you respond to them does. But most traders equate losing with failure. So they hold on, they argue with reality, and they let pride turn a small error into a catastrophe. The market isn't fighting them. They're fighting themselves. Endurance completes the triad. It's the patience to do nothing when there's nothing to do. It's the psychological stamina to sit still during uncertainty. Most traders believe the game is about constant engagement, endless movement, endless validation. But the truth is inverted. The real money is made in waiting. Waiting for alignment, waiting for clarity, waiting through boredom without forcing trades to exist that aren't there. In Douglas's framework, this is psychological comfort with uncertainty. When you can remain still and objective while your mind craves action, that's endurance. Character isn't proven in conversation or intention. It's proven in the heat of the market. It's easy to talk about discipline when prices are calm. It's harder when your open trade is moving against you and your beliefs are being tested. The market reveals who you really are. When fear rises, do you act on impulse or on plan? When a profit grows, do you take it prematurely out of fear of loss? When the market disagrees with you, do you argue or adapt? That is your character. Not what you say it is, but how you behave under pressure. The big money isn't in thinking, it's in sitting. Mark Douglas would agree, not sitting physically, but mentally. The sitting is psychological. The ability to maintain emotional equilibrium while uncertainty unfolds. You sit while the market tempts you to flinch. You sit while external voices question your decisions. You sit when your emotions tell you to flee. Every tick tests your belief system. Anyone can act. Few cannot act. That's real discipline. How many times have you sabotaged a winning trade because you couldn't tolerate the discomfort of open profits? Discipline, humility, endurance. They sound simple, but they demand mastery over your internal environment. You can study every method in existence, but without emotional structure, you'll crumble when it matters most. The market mirrors your internal state. It reflects your fear as hesitation, your greed as overtrading, your ego as denial. Every drawdown tells the same story. The conflict isn't with the market, it's with yourself. The consistent trader doesn't try to control the market, he controls his response to it. Humility isn't weakness, it's alignment. It's respect for uncertainty. It means recognizing that your beliefs don't move the market, only collective perception does. A humble trader doesn't need to be right. He only needs to protect his edge and preserve emotional capital. The arrogant trader defends his opinions. The humble trader defends his process. Which one survives longer? Endurance is the real test. The market will probe your limits endlessly. False starts, shakeouts, boredom. It's all designed to expose your emotional triggers. The trader with endurance understands that uncertainty never disappears. He just learns to coexist with it. He saves energy for moments that matter while others exhaust themselves chasing shadows. Discipline is not an achievement, it's a practice. Every trade is an opportunity to either reinforce your structure or betray it. You never arrive at discipline. You renew it every day through awareness. Each mistake, each emotional lapse, becomes raw material for growth if you choose to learn instead of blame. That's how psychological capital compounds. Over time, it becomes obvious. Trading isn't about the market. It's about you. The market doesn't change, only your perception does. As your self-awareness expands, you begin to recognize that the challenge was never price. It was your internal dialogue reacting to it. The market doesn't test your intelligence, it tests your belief system. The market rewards clarity and punishes attachment. Most traders lose not because they can't read price, but because they won't accept what they read. They let ego rewrite reality. They cling to being right instead of being present. The tape never lies, but the mind lies to protect identity. That's why the consistent trader values observation over prediction. He's not trying to control. He's trying to see. Observation isn't passive. It's active awareness, the practice of watching behavior without projecting expectation. It's noticing when the market behaves differently than it should. A stock showing strength in weakness or weakness in strength, that's market behavior revealing changing beliefs. But you can't see it if your mind is already filled with what you want to see. Ego craves validation. Observation requires detachment. Which one do you think the market rewards? The best traders aren't fortune tellers. They're quiet observers. They see human behavior play out on the chart. The cycles of fear and greed, hope and despair, over and over again. They don't resist it. They ride it. To see clearly, you must release the need to be right. That's the foundation of mental freedom, the core of Douglas's teaching. Your biggest losses don't come from being wrong. They come from refusing to admit you're wrong. The tape isn't punishing you. Your resistance is. When you let go of the need to control outcomes, you start flowing with probabilities instead of fighting against them. That's when you begin to experience consistency. Observation is active patience. It's the ability to see without interference, to study price action as a reflection of mass psychology, while keeping your own beliefs fluid. Every great move leaves footprints: accumulation, distribution, exhaustion. They're all visible to the trader who looks without ego. The one who needs to be right will miss them, blinded by attachment. The market doesn't reward prediction. It rewards alignment, a mind quiet enough to see truth as it unfolds. And that's the difference between those who endure and those who vanish. Aren't your most painful losses the ones where you ignored what the market was clearly showing you? The hardest part of trading isn't analysis. It's getting out of your own way. The market isn't your enemy. Your internal resistance is. The tape doesn't deceive you. Your expectations do. The moment you stop projecting what you want to see and start observing what is, your results begin to stabilize. You're no longer fighting reality. You're aligned with it. That's the real essence of trading: alignment, not control. And yet most traders will never truly learn it, because their ego would rather be right than profitable. So ask yourself honestly, do you want to be right, or do you want to make money? Ego feeds on excitement. Observation lives in stillness. When volatility surges and emotion fills the air, ego urges you to jump in, to prove yourself. But observation remains centered, watching, sensing where the energy of the market actually lies. Ego believes a move is real because it wants it to be. Observation tests it, watches if it sustains under pressure, if participation builds, if the structure confirms strength. Ego blinds, observation reveals. The market rewards the one who sees without distortion. Haven't you ever wished you'd waited just a bit longer for confirmation, for clarity, before acting? The market teaches constantly. Every session, every week, every cycle, it shows you the consequences of fear, greed, confidence, and exhaustion. Those lessons are always there, waiting for anyone calm enough to watch. But ego refuses to watch quietly. It insists on knowing, on predicting, on proving. The observer simply learns, adapts, evolves, not trying to conquer the market, but to understand its rhythm. That's why observers endure while ego-driven traders burn out. Imagine how different your results would be if you observed twice as much and acted half as often. Observation without ego is rare because it's quiet. There's no applause in it, no public validation. You don't get to boast that you called the top. You simply get to say, I saw what was happening and I followed it. It sounds dull, but dull is profitable. Ego gives you stories. Observation gives you consistency. Each time you sit before the screen, the same choice reappears. Do you chase excitement, or do you choose presence? The patience to do nothing's more valuable than the impulse to do something. This is one of the hardest truths in trading, and the one most never internalize. Everyone enters the market believing that constant action equals progress. They think being in the market means they're participating. But the opposite is true. Profit comes from waiting, not from movement. Waiting for alignment. Waiting for the wave of momentum to confirm. Waiting while the market exposes those who can't wait. Do you feel uneasy when you're not trading? As if inactivity means missing out? That anxiety is the itch that destroys accounts. Most traders don't fail from lack of opportunity. They fail from lack of restraint. They trade out of boredom, not conviction. They react to noise instead of waiting for structure. Every tick becomes a temptation. A small uptick feels like opportunity. A small downtick feels like danger. Back and forth they go, draining emotional and financial capital. It feels like progress, but it's actually self-sabotage disguised as effort. Haven't you ever caught yourself placing a trade just to feel engaged? Patience is the discipline that separates observers from impulsive participants. It's the strength to remain still amid constant stimulation. It's not laziness. It's active control. The ability to sit in stillness while remaining alert is the highest trading skill. Like a hunter waiting in the blind, silent, focused, watching. He doesn't fire at every sound. He waits for the clear signal, the clean target, the high probability moment. Then he acts swiftly, decisively, and returns to stillness. That's how consistent traders operate. They act only when the evidence aligns with their edge, not when emotion demands action. Which one do you think the market rewards, the restless or the ready? Every great trading success I've ever known came from patience. The discipline to wait for conditions to align, the awareness to recognize when the wave is forming, the courage to act when the probabilities favor it, and then the harder part, the patience to hold. The temptation to take profits too soon, the fear of giving them back, the boredom of waiting through consolidation. These are the true tests of consistency. The market will always test your endurance, not to break you, but to show you where your limits still lie. That's the real journey, learning to see clearly, act calmly, and wait patiently. The more you can observe without ego, the closer you get to trading in the zone, where thought, action, and market flow move as one.